Hello and welcome. I'm on page 123 of your course pack, picking up where we left off in the last lecture video, talking about first in, first out, okay? So remember first in, first out. What we do is in terms of our tables, we start at the oldest purchases, show up in cost of goods sold. So is basically FIFO mimics the physical flow of inventory. We're this bike shop. When we get bikes in, as they come in, we assume those are the ones that we sell first. So if we made the sale on the 14th and we say, well, which ones did we sell first? Well, we sold all of our beginning inventory, and then we work our way down. Okay. So what I want you to do is to pause the lecture video, and I want you to complete this table. So for the 17th, 28th, and then the 31st, just like what we did with specific identification. But remember, you're going to have to recalculate cost of goods sold using FIFO, not specific identification. So go ahead and complete it for the 17th, 28th, and then 31st. And then with the 31st, you're going to have to look at how we did cost of goods sold here for FIFO, and then apply that same logic to the 31st when we made the sale, okay? And then restart the video and check your work. All right, thanks. Okay, hello and welcome back. So let's see how you did. So on 8/17, it says we purchased 20 at a cost of $115, which gives us the $2,300. And then on 28th, it says we purchased another 10 at $119 cost. And again, the way that I got to this cost is I think it says that just we purchased 20 at a total cost of $2,300. How did I get 115? I just divided 2,300 by 20 to back in to figure out 115. Same thing over here. It says bought 10 bikes at a total cost of $1,190. 1,190 divided by 10 means we bought each bike for $119. Okay, so then we add that to our 2,300 plus the 530 gives us our inventory balance as of the 17th of 2830. 2830 plus our 1,190 gives us an inventory balance of 4,020. On the 31st, we sold 23 bikes. Which ones did we sell? First in, first out. So the oldest, the bikes that we've had the longest, those are the ones that we sell first, right? Or the bikes that we acquired first are the ones that we sell first. The bikes that we acquired first are the ones that we sell first. So we've sold all of our beginning inventory. And so we bought 15 at 106 and we sold 10 here. That means we have 5 left over. So we sold those 5 at 106. So all the 106 are gone. Then we move to the 115. We have 18 bikes left, right? Because we sold 23 bikes total. And we sold 5 at 106. That means we have 18 bikes that we have to figure out the cost for. 23 minus the 5 gives us the 18. Well, that means I could sell all those 18 at this cost of 115. Gives me the 2,070 plus the 530. $2,600 is my cost of goods sold. So which ones do I have left over? Well, I don't have any more at the 106, right? Because I sold all those, and I still have 2 left over here because I sold 18 out of the 20, which means I have 2 left over. I didn't sell any of these. These are still on the shop floor. The most recent purchases, we just put them out. Nobody's bought them. 10 at the 119, 1,190 plus the 230 gives me the 1,420. How else could I figure out the 1,420? I could say here's my merchandise available for sale minus my cost of goods sold gives us my inventory balance. Okay? So what I want you to do now is just like what we did for specific identification. I want you to do the journal entries to record the sales on the 14th and then the 31st and assume that we sold all these bikes on the 14th, right? 20 bikes. We sold each bike for $130. And we sold 23 bikes over here on the 31st, and we sold each bike for $150 each. Okay? So pause the lecture video and do those 2 journal entries. If you're not sure where to start, look back at the journal entries that we did for specific identification. It's the exact same journal entry, just different dollar amounts for cost of goods sold and merchandise inventory. It's these amounts right there. Okay? All right. All right, welcome back. So again, we multiplied the 20 times $130 for each bike gives us the 2,600 right there. And then we credit sales for the 2,600. And then our cost of goods sold, we saw that right there on the 14th. Debit cost of goods sold, 1970. credit merchandise inventory 1970. On the 31st, we sold each bike for 150. 150 times the 23 bikes gives us the 3450. Credit to sales for 3450. And then we debit cost of goods sold 2600, credit merchandise inventory 2600, which is exactly what we had over here. Okay, same thing. All right, so hopefully you got those right. Let's look at Lifo. Okay, so we have last in, first out, Lifo. All right, so Lifo is kind of the opposite of Fifo. Okay, Lifo says that the most recent purchases that we get in, right, the most recent purchases are the ones that we sell first. So if we think about that table, we work our way upwards. With the Fifo table, we started from the top and worked our way down. With the Lifo table, we start at the bottom and work our way up, because the most recent purchases show up in cost of goods sold. We say we sell those most recent purchases. That's what we're assuming. The most recent purchases are the ones that we sell first. Okay, and then the oldest ones, like the beginning inventory, that stays in cost in ending inventory. All right. So let's look at our example. Same example as before. Okay, same bike shop. Let's go ahead and set up our table. Okay, so we'll go date, and then we'll go purchased, and then we'll go cost of goods sold, and then we'll say our inventory balance right there, just like that. Okay, so we have our date 8/1. Remember, that's our beginning inventory, and we had the 10 at the 91, which gives us our 910. You know that. And then on 8/3, 15, we purchased another 15 at 106, which gives us our 1590 plus our 910, gives us our $2,500 inventory balance. On 8/14, we look over here, and I'm getting these numbers. This is the same as what we did with first in, first out and specific identification. Okay. It says I sold 20 bikes. But it doesn't tell me, unlike specific identification, right? It doesn't tell me I sold 8 bikes at 91 and then 12 at the 106, because we don't know that. You know, we're assuming now we're selling tons of bikes each day, and we can't keep track of that. So we have to make a certain assumption here. Okay. And what we're assuming with last in, first out is that we sold the 106 first, and then we moved to the beginning inventory. So the most recent purchases show up in cost of goods sold. The oldest purchases stay in inventory. Okay, so it's the opposite of first in, first out. Okay, when we look over here in terms of our cost of goods sold, then we sold all this 15 because we did 20 bikes. We sold all the 15 at the 106, 1590. All right, and then I sold 20 bikes total, which means I have 5 left to go. Right, because I'm at 15, I have 5 more bikes to sell. That means I sold the 5 at the 91, which equals our 455. We add those two together, gives us cost of goods sold, 2,045, 2,500 minus my 2,045 gives me my inventory balance of 455. Okay, which is equal to, which ones didn't we sell? The 2 at 91. I'm sorry, the 5 at 91. Okay, 5 at 91. All right. So then we can move on to 817, but I think what I'd like you to do is to pause the lecture video and complete this table and also do these 2 journal entries, and then come back and check your work, okay? Okay, well, welcome back. So let's see how you did. So on the 17th, purchased 20 more bikes at $115, $2,300 plus the $455 gives us the inventory balance of $2,755. On the 28th, we purchased another 10 at $119, gives us $1,190 plus my $2,755 from before gives us an inventory balance as of the 28th of $3,945. On the 31st, it says we sold we sold 23 bikes. Well, which ones did we sell? Remember, with last in, first out, the most recent purchases show up in cost of goods sold. Which is the most recent purchases? Well, I sold all these 10 at 1,190, and that means I have to do 13 more bikes to get up to 23, because I did 10 here, 23 minus the 10 is 13. So then I did my 13 bikes at the 115, 1,495. I can take my prior inventory balance minus my cost of goods sold. Typo there, 2,685. 3,945 minus my 2,685 gives me my 1,260, which is my ending balance in inventory. How else could I check my ending balance in inventory? Well, which ones do I have left over? I never sold these beginning ones. 5 at the 91, 455. And then I sold all mine at 106. I sold them here up on the 14th. But then I didn't sell all these, right? How many of these did I sell? 13. So that means I have 7 left over. At the 115 gives me the 805. The 455 plus the 805 gives me the 1260. And then I match up. And then I asked you to do the journal entries. And again, I don't know if I clarified this when I asked you to do the journal entries, but the price that we sold each bike for on the 14th is 130. And the price that we sold each bike for on the 31st is 150, just like what we've been doing before. Okay. So with that, the journal entries to recognize the sales are always the same. It's always accounts receivable, debit, sales, credit, $2,600, which is the 130 times the 20 bikes. My debit to cost of goods sold and credit merchandise inventory, 2,045. Where did I get that? Straight from my table. Okay. On the 31st, I sold 23 bikes at $150 each. That's the price. 23 times that 150 gives me 3,450. Debit accounts receivable, credit sales, 3,450. And then my debit cost of goods sold, credit merchandise inventory, where I get my cost of goods sold number right there. Okay, from the 31st from my table. And then my journal entries are complete. So the actual accounts that you debit credit are the same across all these inventory costing methods. And it doesn't affect the price. It's just how much do you debit cost of goods sold for? And that's why we're doing this. That's why we're doing this, because we can't track for high volume products. It's impractical to track the exact cost of the products that we sell. Think those 3,000 boxes of markers. It's impractical to tag each box and say, we bought this specific box for $1, and this specific box we bought for $1.50, and this one we bought for $2. It's impractical to do that, and expensive to do that. So we don't. So we make certain assumptions. We say, well, maybe the most recent box of markers that we bought, we sold that one first. That would be last in, first out, Lifo. Or the first boxes of markers that we acquired, those are the ones that we sell first. In that case, that's first in, first out, Fifo. Okay, so we have to make those certain assumptions to get around the fact that it's not practical to tag each box. You still might be thinking barcodes. Barcodes don't tell you that. RFID tags do, but RFID tags are expensive. Okay, maybe in the future, they'll get cheap enough where we can do that. And maybe if you're ever in my position teaching accounting in 20 years from now, you'll be saying, we used to have these Lifo, Fifo things. Well, now we just do specific identification. I don't know if we'll ever get there, but maybe. We'll see. Depends upon the technology and how cheap and useful it is. All right. Something to think about. All right. Well, thank you. I'm going to end this lecture video now, and then the next one will cover weighted average and also financial statement effects of costing methods. Okay. Thanks. Bye.